Hello, this is Tamir Zain from ElliottWaveForex.com with your weekly analysis for the Euro-US dollar currency pair. With the intense drama of the US elections, described by many as the most nerve-wracking election in recent history of the United States, it's not very surprising that the market has had a couple of very interesting weeks as well. It began with the euro's sudden and swift rally of nearly 500 pips, which included the biggest single-day action we've seen in several months, and this was immediately followed by an even more massive decline that wiped out all the preceding rally and then some. Right now, the odds are stacked in favor of the long-term bearish scenario, but it's still very early days to be sure, and there's a definite possibility that this is nothing more than a whiplash of volatility within a remarkably prolonged consolidation phase. It's also interesting to note that both of these higher probability counts are ultimately bearish. We're focusing this week on discussing the larger picture over the long term, and so our targets reflect this larger time frame. Hopefully next week there will be enough new data to calculate more useful and tradable targets. We're updating our counts to reflect the most recent price action and to present targets and invalidation points. So beginning as usual with the main picture on the weekly chart, we see that the euro is now moving towards the downside in teal wave X, which is forming a double zigzag labeled maroon waves W, X, and Y. Within it, maroon wave Y is forming a zigzag labeled black waves A, B, and C, where black wave A formed an impulse labeled blue waves 1 through 5. Now zooming into a daily chart, the main count sees that black wave B formed a contracting triangle labeled blue waves A, B, C, D, and E, retracing exactly 23.6% of black wave A. Within it, blue wave D formed a double zigzag labeled pink waves W, X, and Y, reaching 61.8% the length of blue wave B. Then blue wave E formed a zigzag labeled pink waves A, B, and C, retracing 61.8% of blue wave D. Now, black wave C is likely forming an impulse labeled blue waves 1 through 5, and within it, blue wave 1 is likely forming another impulse labeled pink waves 1 through 5. This count expects the euro to continue moving towards the downside in black wave C to complete maroon wave Y and therefore teal wave X. This is already the default count, and it will be finally confirmed by movement below 1.0525. At 0.9117, black wave C would reach 61.8% the length of black wave A, then at 0.7768 it would reach 100% of its length. This wave count is invalidated by movement above 1.1300, as pink wave 2 may not move beyond the start of pink wave 1. As for our alternate count, this one sees that blue wave D of black wave B is still unfolding as a triple zigzag labeled pink waves W, X, Y, X, and Z. Within it, pink wave C is forming a zigzag labeled green waves A, B, and C, and so this count expects the euro to finally move towards the downside in pink wave Z to complete blue wave D. At 1.0746, pink wave Z would reach 78.6% the length of pink wave W, then at 1.0596 it would reach 100% of its length. Now note that this count has a lower probability because triangle subwaves are almost never known to form triple zigzags. This count is invalidated by movement above 1.1300, as green wave B of this zigzag may not move beyond the start of green wave A, and it's also invalidated by movement below 1.0525, as blue wave D of this contracting triangle may not move beyond the start of blue wave C. That's all for our analysis for this week. I wish you profitable trading and see you next time.